right, and we are live here on the Tradier Hub. Super excited to be here. Super excited that you are tuning in. So, this show here is called Coffee with Markus for a very simple reason. I just thought that we'll chat about the markets, what's happening there, and that I show you how I'm trading these markets. Now, you know all of these disclaimers. This is not meant to be investment advice, and I'm not saying that you should take the trades. It's just I want to share with you what I'm doing, and this way you see what other traders think when they're entering their trades, and hopefully it will help you. So I don't know about you. I have my coffee in my favorite mug. You see, it says follow your plan. So I'll show you my plan that I have when I am attacking these markets. Is this what we still say? Attacking the markets? I think we'll be good. Okay. Hey, if you're joining us live here, do me a favor and leave a comment. This way I know that you're here. If you're watching the recording, I don't know if I have time to check the comments, but at least leave a like here. This way, this show will grow. All right. So if we can share my screen here for just a moment so that we talk about where we are right now. So as you can see, the S&P has had a really great run up this year, but over the past few weeks, we have been going down. And you see, this is where everybody is the best trader in the world when the markets are going up, right? I mean, let's just look at a weekly chart here for a moment of the S&P 500. So we see that. Do you remember back during the pandemic when everybody got super interested in trading, especially trading options? Yeah, the markets got just going up, and this is where it was fairly simple because that's where you can just basically buy an option and hope that the market keeps moving higher. I mean, this was just a tremendous run. But as you know, the last couple of years have been a little bit more rocky. And this is where I want to show you how I am trading these markets so that I can trade them in any market condition. So I personally like to sell options. And this is where you might be surprised and say, what the heck? Selling options? I just heard about buying options. And this is how everybody starts with buying options, right? If you're new to trading. But then at some point you realize, oh, selling options actually makes sense. And one of the first things that many traders do is that they're selling covered calls. And I think selling covered calls is a great strategy. I'm actually putting one step ahead of selling covered calls. And I want to show you exactly a trade that I did last week. And we'll jump between these two tools here. So the tool with the white background, this is the Power X Optimizer. And this is a software that I had programmed for myself many years ago. And now I'm making it available to other traders here as well. So just so that you know, this is whenever you see the light background. And when you see the dark background, this is just good old trading view that many traders are using, a very simple charting software. But I want to show you a trade that I did last week. And this is a trade on GM, General Motors. And here is how this whole strategy works that I'm about to show you right now. So this is the chart of General Motors, and if you're looking at the chart here, we see that okay, pre-pandemic we were around these levels, which is anywhere between 33 and maybe 32 and 44, right? So on the lower level, there we go. Then we were just massively running up during the pandemic. I mean, at first we were plummeting all the way down to 12, then moving right back into the range, going into a different range. And now we have come back and we are just back inside this range. So, I mean, if you just look at this chart, not knowing anything about GM or just looking at a chart, what do you want to do if you're seeing a chart like this, right? If it is just going sideways? Well, I don't know about you, but I would like to be a buyer at the lower range right here at around 32. And then I would like to be a seller as we approach 40, 41, 42, something like this. You get the idea. Okay. So now there's, of course, the possibility that you can just simply buy the stock at 32 as soon as it goes down there. But since we have the fascinating world of options, here is what I like to do. So let me just get rid of this and share this again with you. So if I already know that this is a stock that I want to buy at this lower end of the range, which would be at 32, then I can simply add one step before this and I can sell a put option with a strike price of 32. And that's exactly what I did on Friday. So just the last trading day, today is Monday. So on the last trading day on Friday, this is what I did. And I want to just zoom in here on the calculator so that you see what I did. So on Friday, GM was trading around 33, and I did sell a put option with a strike price of 32 that expires on Friday. So right now we have 4 days to expiration until it expires, and I was able to get 25 cents. Now you might say, 25 cents? What the heck? This is not worth doing it at all. Well, wait a minute. Let me show you some math behind this. So, first of all, my account size is a little bit bigger, so I'm trading larger sizes. As you can see, based on my account size, the suggested position size is 63 contracts. Now, if we take 63 contracts and multiply this by $25, this gives us, as you can see here, $1,575 in premium. That is not bad at all. And now we have two options. So, pun intended. So let's go back to the chart and let's actually take a look at this. And there is only kind of two possible scenarios. So this is a strike price of 32. And on August 25th, which is on Friday, we have scenario one that we are trading above 32. In this case, the option to expire worthless. I keep the premium of $1,575 and nothing happens. However, there's scenario two that we could move below 32. In this case, I would be forced to buy the stock at $32. Now, how many? Well, I sold 63 contracts, so I would have to buy 6,300 shares at $32. Well, that's okay. That's a level where I was planning to buy anyhow. Here's the cool thing. If whether scenario one or scenario two is happening, I keep this whole premium of $1,575. So that is the cool thing. If you think about it for a moment, it means that you're getting paid to buy stocks at a discount, right? Because on Friday, GM was trading at 33, and I'm getting paid $1,575 to buy this stock at a discount. I think this is a pretty good deal. Now, again, I told you this is how I like to trade the markets, and it is not for everybody. Because the question is, okay, got it, all good, but what if the stock, if you get actually assigned, and the stock keeps falling? And this is where I want to show you also a current example of a trade that I recently did. And we're going to zoom in here, and this is ALB. So with ALB, I said, you know what? I am okay. Let me switch back to green. Red is always so aggressive, isn't it? So I said, you know what? I want to be a buyer if ALB comes down to 192.50. That was my price where I said, I'm okay buying ALB for 192.50. And I'll show you over the next few weeks and maybe even today a little bit more of how I do my analysis and how I'm doing this. But this is just the intro show here, and I want to make sure that we are cool. Let me just see if we do have any comments so far before I move on, because I want to make sure that I'm actually, answering all of the questions or comments that you have. Max and Ruben, it seems that there's no comments just yet. At least I don't see them. So if there are any, they're not showing up for me just yet. Okay, I'll just assume that there's none. We will check this out later on. Anyhow, so this is where I sold the 192.50 put. Now, as you can see, this is where ALB dropped as low as 180. And right now, as we're recording the show, it is trading at 186.50. So this means that on this stock right now, I am losing money, right? Well, yes and no. So first of all, the cool thing is, since I'm collecting premium, very similar to the $1,575 that I collected, I immediately have a lower break even. So even though my cost basis, and this is where we want to zoom in here, even though my cost basis is 192.50, this is where I got assigned, since I was able to already collect my premium, my break even is much lower. My break even is the cost basis minus the premium that I received. So it's at $187.39. Now, looking at the chart again, this is where we're doing much, much better. So yes, I'm still losing money on the stock, but it is only less than $1, which I think is pretty good. Now, here's the other thing. What you can do right now, since you got assigned in this stock, or since I got assigned, I want to show you exactly what I did this morning. So we're going back to the calculator. And on the calculator, you will now see that here I'm collapsing this so that we see here are some stocks that I got assigned in. And one of them is ALB. And this morning, I was able to sell the $192.50 call for, it's actually $1.80 that I received. So let me correct this. Let me just hop out of this really quick. There. Let me type in $1.80. So this means I received $1.80, which, based on the amount of contracts that I'm trading, translates into $1,800. And again, we have two possible scenarios for this stock, and this is where we go back to the chart. Let me just hop over there. If by Friday, so I want to zoom in a little bit. There we go. Okay. So I sold the 192.50, and right now we are trading at 186.53. So scenario one, on Friday, we are closing above. Let's see. I thought it would be easy to 192.50. Thought it would be easy to delete it. It probably is. I just couldn't find it. So we're all good, right? So in this case, my stock gets called away, but I still keep the premium of $1,800 plus all of the premium that I've received so far, right? So therefore, I just collected a lot of premium. Scenario number two, it stays below 192.50. In this case, nothing happens. I still own the stock, and I can sell more calls against my existing position. So here's the other cool thing. This break even that I showed you, the 187.39, was just based on all of the closed trades. This here is an open trade. And again, so for each share, I basically received another $1.80. So this would reduce it by $1.80. So on Friday, my break even gets lower again. And I'm using my handy dandy calculator here. And the handy dandy calculator is the one that I have on my iPhone. So I'm taking the 187.39 minus $1.80. So on Friday, when this expires, my break even will be lowered to 185.59. Pretty cool, right? Pretty cool. So this is the idea. And this strategy, I mean, this is nothing new. This strategy has been around. I'm not standing here in front of you or sitting in front of you having coffee and claiming that I invented the strategy. No, this strategy is very popular and is called the wheel strategy, but everybody trades it slightly differently. This is how I trade it, right? And the idea here with the wheel strategy is that first, you are selling put options. Number two, you're getting assigned because this means that you're buying the stock at a discount. And then number three, you are selling calls, and this would be covered calls against your existing position. So that's pretty much what it is. Sounds super boring, and honestly, it is. And you know that your trading is going well when it is boring. You should never trade for excitement, right? I mean, at least my goal is to make money with trading. For excitement, there's other things that you can do. You can jump out of planes. You can, I don't know, go to Las Vegas. You can do online gambling, whatever it is. So with my trading, I want to make money. So it's very systematic. And this is another thing that I want to share with you really quick. And then we take a look at a few questions here, if there are any. So I just want to give you an idea of the way how I like to trade. So I like to trade in such a way that I'm making SRC profits. And this is what it stands for. So this means that it is systematic, that I have a system, that I know exactly my rules and they are black and white that I can follow. Number two is that this is repeatable, right? I want to make sure that I'm not catching, I don't know, a meme stuff. Do you remember all the craziness with GameStop, right? Or AMC theaters? So I don't want to wait for the once in a lifetime opportunity. I want to make sure that the strategy that that I'm trading, that I'm deploying it in the markets every single day. And C is that my profits are consistent. See, I used to trade in the past strategies where I would just wait for this one windfall trade, the 10x trade that every trader likes to have, right? Where a stock goes from $100 to $1,000 or something crazy like Nvidia this year that is just shooting to the moon, right? I mean, this is the goal. And then what do you do for the rest of the year? Just having small losses or nothing at all. So I want to make sure that I'm able to get money out of the markets consistently. And for me, this means hopefully every week, at least every month, every quarter, every year, right? So this is the idea here, that small profits are adding up if they are consistent, because then you can consider using leverage, aka margin, to your advantage. I mean, don't do it right away, but once you know what you're doing, this is something where you can basically put on a little bit of the turbo boost to your account. Okay. Anyhow, let me check if there's any questions. Is this making sense so far, what I'm sharing here with you? And if it does, and if this is beneficial to you, do me a favor and click on like. This way I know that you're enjoying this, because again, this show here on Tradier Hub is for you. I mean, I'm really just here having my coffee together with you, chatting, sharing what I do. So you will never see me being here and saying, oh, you have to trade this way. And if you don't trade this way, then you will lose all your hair and your spouse will leave you and your kids will never talk to you and your dog will die or something like this. No, I'm just sharing with you what I'm doing. And I know that the other participants here on Tradier Hub are doing it. This is why I'm so glad to be part of this program here, because this way you get some ideas, right? And the goal here for us at Tradier, or on this Tradier Hub, is to give you ideas that you could incorporate in your trading. And the question is always, what is the best trading strategy? People ask me all the time, what is the best trading strategy? Well, let me tell you, the best trading strategy is the one that lets you sleep at night. If you're waking up in the middle of the night, staring at the ceiling, saying, what have I done? Worrying about your position, your trading strategy is not good. Your position size might be too big. You might have a trading strategy that does not require stop losses or uses very large stop losses or whatever it might be, right? So the best trading strategy is the one that lets you sleep at night. And honestly, for some people, it means not to trade, putting your money into CDs or fixed interest accounts, which again, there's nothing wrong. Or maybe you want to invest in real estate, or maybe you want to invest in business. That's all cool. Trading is not for everybody. And you probably have experienced this, that some people, when you talk to them and they just say, oh my gosh, trading, you will lose all of your money, and then, okay, trading is not for you. Cool. Don't worry about this. Okay. Let's see. So there is a question. Would you ever buy a put as well at a lower strike? Part of the put sell premium, using part of the put sell premium to add safety to the trade. You know what? It is a great question that I get all the time. And this would be basically a put spread. And there are some trading strategies to take advantage of this. And again, there are so many different ways to trade the wheel strategy. You could this, if this is what lets you sleep at night, that you would like to have some downside protection, you can absolutely do it. For me, I just like to use short expirations, right? So for example, today is Monday. On Monday and Tuesday, I'm using this Friday's expiration. Now, can it be that between today and Friday, a stock is massively falling? Yes, but it is not very likely. However, if I choose a fairly long expiration, right, where I'm going out a few months, then it might make more sense to add this layer of protection. Or again, if this lets you sleep at night, but cool beans. All right, so let's bring up the charts again. And I see that there's another question, follow-up question. So how much time per week do you need to spend trading using these strategies? Well, I'm okay, here's a secret. This year, I'm turning 54. And as I'm getting older, I seem to have more trouble focusing. So back in the days, 15, 20 years ago, I was heavily day trading. I was day trading futures. Loved it. Loved the action. These days, I enjoy life. So this is where, for me, I typically spend 15 minutes before the market opening until 15 to 30 minutes after the market opening looking for trades. So that's anywhere around 30 to maybe 45 minutes. And I don't even trade every single day. So it's a very relaxed way for me to trade. And this is where, again, it goes back to a trading strategy that fits your personality and your lifestyle, right? So for me, day trading was fun back in the days. I'm no longer doing it because I like to get up in the morning, have my cup of coffee, look at my charts, find opportunities, put the trade on, walk away. And that's pretty much my type of trading. And that's what I want to share with you here. All right, cool. So looking back at the chart. So let's actually look at the charts live right now in real time and see if there are any opportunities right now that we could take. And I want to go back to the GM trade because the GM trade, honestly, it's still available right now. So I told you that I took it on Friday. And right now, take a look at this. You could actually, if you're zooming in here a little bit, right, you could sell the 32.50 and would get $26 per option that you're selling. So that is not bad at all, because if you think about it, in terms of annualized ROI, return on investment, that would be 58% per year. So I don't think that this is bad at all. Right now, GM is trading at 33. If you like the idea of owning General Motors at 32.50, that might actually be a trade that you could consider. But let me show you one other trade that I looked at this morning where I thought, that's pretty interesting. It is DFS, Discover Financial Services. You know, the credit card processor. So if you look at the chart, so we're zooming out a little bit, that we see a little bit more on the chart. There we go. So you see that before the pandemic, we were trading right here at around where we are now. Then during the pandemic, DFS went down, went up, and basically has been trading in this range of, I want to say anywhere between 90, there we go, 90 and 120 since beginning of 2022. So that's what, more than 1.5 years. And so this is where I would say, you know what, right now you could actually sell a put on DFS at a strike price of 88 and you would receive 40 cents. That's $40. So look at the chart. This is where you choose, right? Do you want to be a buyer? Do you want to own DFS in your portfolio here for $88? Right now it is trading at 91.18. So you would basically get paid $40 per contract that you're trading. So for each 100 shares that you want to trade, to buy it at a 3% discount, because that's the drop in percent that we would have, yeah, until we get a sign, since we are trading at 91.18. So do you like the idea of receiving money to buy DFS 3% lower than it is today? And if so, then this might be a really cool trade for you to consider. If you say, no, I'm not the biggest fan of DSS, I think financials might be in trouble. Okay, cool. You see, this is where I have a scanner and I have a conservative and I have an aggressive scanner. And you see this right now on the conservative scanner, there's 16 possibilities right now that we could trade. On the aggressive scanner, if you want to be a little bit more aggressive, there's 50. This is where it goes back to the SRC profits, especially the R for repeatable, right? Because I want to make sure that I have opportunities every single day. And with this particular strategy and the way how I like to trade it, I do have opportunities every day. So this is where over the next few shows, we can talk more about the filter settings. We can talk more about of how exactly I'm finding the stocks. And of course, we can follow along on some of the trades that I'm in. So we can follow along on the GM trade. We can follow up on the DFS trade. We can follow up on the ALB trade and a few other trades that I'm in, if you're interested in this. And if you are, all I'm asking you is just click like, because this way I know that you're interested in doing this. And then we keep doing more of this. And if you're not interested in this, click like anyways, but then don't watch it anymore. You get the idea. Okay. Well, let's come on full screen and see if there are any other questions available at this point. And you see, the other thing is what I like to do with these shows is keep them rather brief. So my goal is to keep it at around 30 minutes or maybe below, because this is how long it might take you to have your coffee or tea, or if you're somewhere abroad and it's already in the evening for you as you're watching it, it is 5 o'clock, 6 o'clock, maybe you have an adult beverage with you. But I thought it would be cool to hang out here for around 30 minutes, talk about trading, chat, and see what is going on in the markets and how to trade it. All right, cool. That's what I got for you today. So you get a little bit of an idea of how I trade, and we'll follow up and dive deeper into this as we go in the coming weeks. So thanks for tuning in. Really appreciate it. I really enjoy being here with you. Check out all the other fantastic presenters that you have here on Tradier Hub. Subscribe to the Tradier channel. This way you get notified whenever one of us goes live, and you can be live here and ask questions. Again, while you're asking questions here during the live show, I can interact with you. I won't have much opportunity to look at the comments after the show is over. So make sure that you're tuning in live, and then I'll see you again next Monday. All right. Have a great rest of your day, and go make money trading. Okay.